Good morning, guys, and welcome to today's edition of the London Session Open. Today is March 30th, 2020, and it's almost 9 a.m. in the morning when I'm doing this recording. Today we're doing it as a recording, so I won't be able to do it live for you. We're going to take a look at the markets as we usually do, and we have some very good news actually, at least if the numbers continue the way they are. Then coronavirus is definitely spreading less faster than we have seen recently, and that's really what's important for the markets, but that's also good for everyone, really. So we're going to talk about that. We're actually going to begin with taking a look at some of the numbers. So I've been compiling some of the numbers over the weekend here, and you have obviously the dates here, which you can see here, and then you have, well, yeah, yes you can, and then you have the different countries here. So let's just begin with Italy. Numbers on Sunday. On Sunday, we saw an increase of 5.6%. That's obviously a good increase of 5,217 new cases, but it's far less than we've seen recently. Like just a few days ago, you got 6,153 new people. But it's the percentage growths that are important. How many new people acquired over the old total. So before the lockdown, they had a growth rate of about 24, 25, 27, 20%, sometimes even higher, 50% some days. But you can clearly see here since the lockdown how the numbers are going down, down, and down. And for a few days, which is around 8, then 7.4, 6.9, and now 5.6 on Sunday. Of course, it's actually quite interesting, but all the numbers on Sundays here is down for many of the other countries, even the US. So maybe things are going to change on Monday. Maybe people taking time off, or they're not doing as many tests on Sunday as before. But we clearly see a nice little trend here in the Italian data, and I think that tells us what's going to happen in the other countries, because what Italy is doing is nothing new. They already did it in China. They just did it much quicker than we did. It depends actually how you look at it, because obviously they didn't really. Actually, I'll take that back actually, because remember there was a lot of suppression of information. And apparently, they started lockdown on, I think, this third week of January, so around the 23rd or something or so. But the thing had already been in place, I think, since December. I think the first case was in November. So I guess all of these countries did manage it a bit poorly. Obviously, it would have been better if Europe, US, with the experience of what's happening in China, would have done things quicker than they did. Anyway, now it's not the time for the blame game. I think that's what they'll do later. France, nice drop, 7%. Again, they had some very significant growth just before that, average of 14. And on the lockdown, they had 17. And then before that, they had also some 23% growth. So it's definitely gone down a bit, but the Sunday number is really low. And you get the UK. The UK has a lower growth because we locked down on the 23rd. And then we actually had an increasing number of cases. But then on Sunday, we saw a bit of a drop again, which is good. And this is on everyone's mind, really, the US. They have 142,460 cases by yesterday midnight, London time. And you can see here how the growth here has slowed. So when they locked down in California, they had a growth rate of 51% that day. And then the preceding days, they had a growth rate of about 37%. Over the last few days, the growth rate has been about 19, so slightly better. And this is the lockdown of California, and then this is New York on March 22nd. It's not a proper lockdown, but people staying at home. So things are going in the right direction here as well. In Spain as well, they dropped to 9%, and then you got Germany 8%. So there's a lot of single-digit numbers here, and that's actually really good. And that's exactly what the market, especially the stock markets, have been predicting. Like the German DAX did bottom out here on the or bounce on the 19th. So on the 19th, for the sake of it, we'll use the German data. On the 19th, you had a 79% growth in Germany. So that was the highest increase we've seen quite a bit. We did another one here on March 6th, but that's the highest number. Since then, pretty much things have leveled out. And even in the US on March 19, you had a 51% increase. So you can see how the data, when it was at its worst, you saw the lows in the stock markets. And that's exactly what happened in SARS 2003. And also that happens now in the situation with Wuhan and China. So this is all very repetitive. and we just need to use this information, and hopefully we can manage that good. Now, of course, not everybody agrees on the numbers, and there's second round effects here because you have the virus and then you got the shutdown. So the shutdown is now affecting people, and in the UK there was a report that maybe the UK is going to be closed until June, and if that's the case, then obviously I don't think it's going to be difficult because it's another 2 more months, which is not long. It's 2 months and 2 weeks. I think we could possibly manage this, but then if you start to push it more than June, then economically we're gonna be probably in a bit of trouble. And companies that were fragile before are now going bust. It's easy for them to just go. It's not that easy, but they're going bust because they have very limited business. And now you're seeing that sort of a purge of the weakest companies, which again, from a purely capitalistic point of view, this is great because now these people obviously going to be out of work for maybe 6 months, worst case a year, but then they have time to reschool themselves and do something else in industries which are thriving, because not all industries are going to be thriving all the time. In fact, a lot of industries comes and goes. So from a trading perspective, then let's focus a bit on the indices for a bit. So on the 19th, this is when you had that 50% increase in numbers in Germany, and since then, again, things have improved. Now, we talked about buying the breakout here for this to go up. It went up quite nicely. It didn't go all the way up, but it went up quite nicely. From the breakout point, the market rose by almost 10%, 9.78. And if you're looking at this, if you just get rid of everything, so obviously, if we take out something like 9.414, probably gonna revisit that breakout point, and then we'll see if it's a situation that the numbers continue to improve. I think we're just gonna go down, and then we're gonna attack the upside again. That's what I would reckon. But I think the line in the sand now is that level here, which is 9409, and if we take that out, we're probably gonna trade a bit lower. Let's just clean up this chart. So if we take this out, we'll probably go down a bit. I'm gonna get rid of this as well here, and then maybe down here, people are gonna look to be buying in. Now, if you think, no, Alex, you're wrong, things are not gonna improve, like it's gonna be more painful for longer, then selling on the break here again could be something. Then you'll go down, and then when the market bounces, you'll hope that it just bounces a little bit and then continue to trade lower. So that's what you'll be doing. Let me see here. This is the S&P. So the S&P, we talked about buying here as well. So we talked about buying here a few days ago, and then you got those very bad initial jobless claims, and about 3.5 million people applied for unemployment benefits. The market just rose to the upside, and that went really good because the market rose from, we said looked to be bullish from here, and the market rose very nicely. I mean, from the very low to the high, rose I think at 10% again, 9.54. Then we said look to buy on the dip here. So if you did buy on the dip here as the market opened on Sunday, congratulations, you should be up a little bit. Of course, we're still dealing with a downtrend, so we don't know if we're going to be getting out of this with a profit or not, but it's looking okay for now. We had that reaction I wanted to see here. The numbers are improving, so hopefully we can see this continue to go upwards. If we look at crude oil prices, so these are crude oil prices. So we remember we're in a double bottom situation. So we had one low, two lows, and then you got 1, 2, 3 highs at the same spot. I said if we take out the downside, we can probably go down, which we did, and we actually declined very sharply with about some 12%. We now just traded back to levels we haven't seen since 2002. So it's 18-year lows. Looking at this today, we can see that we actually were trapped in a big triangle, and that triangle has a target of 16.068. But you also have these lows, and these lows are actually lows that were in play in I think the year 2002 and the millennia and that time, and I derived it from there, the prior lows, and these are the next targets here. Now the market pretty much traded here and then slid to the downside here on the 29th, and then I think we could probably go up a bit, and then from here people are gonna sell. Maybe they're gonna sell here already and panic, but from a risk perspective, the idea was to sell here for this to go down. That worked out good, and now we're looking at for a corrective move, and then hopefully we can go down again. The trend will remain bearish below 23.42. Looking at gold prices, we said that 1593 is a short-term support level, and I think we could potentially buy here if you wanted to. That still stand, and it still also stands the fact that I don't really like this idea too much, because we were relatively close to the highs and the lows, and so I wouldn't really be buying. But if you really insist, then the trend is bullish above 1593. We can potentially go up a bit, and if we trade below it, we can probably go down to 1551. Looking at the Euro USD, the idea was to buy, and we declined to the first fib, but we didn't decline to the 50 fib, so we could buy. So we missed out that opportunity. So this is a fresh opportunity. I mean, we're long on the direction. We're right to be bullish, and that worked out fine, but we didn't get the entry to ride this. Now looking at this today, you know, we have a low here, which is important for the market. And I think if we go down to 110, then people are going to be buying, and then we're going to target the upside. The trend is going to be bullish at 108.92. GBP USD also looks very, very similar. So if we go down to 21.84, I'm going to be bullish, and then we target the upside. I'll remain bullish above 118.16. And then finally, dollar yen. We talked about selling here on March 19th. That worked. It's now in our favor. And then we said if we can go up, we can sell again. We did go up, or we just went down. We didn't actually even go up. And I'm going to continue to be bearish from 108.79. So if it goes up, I'm going to be bearish. Then we're going to target the downside. And I'll remain bearish below 110.99. Okay, guys, we're going to conclude this market update. If you do have any more questions or anything like that, you can always reach out to me via AlexFX00. In fact, it's really good you can stay in touch with me. I've been using that account for many years. So if you are interested in trading, you like my style, you like my analysis, then that's the account you want to be following. I also recommend you guys to check out investingcube.com for more info from the team at InvestingCube, which I manage and develop the site. So you can check that out. And if you do want to know more about the coronavirus, check out these videos. It's very, very straightforward. I did a video on this not so long time ago. You just need to register and become a member, and then it's free. Everything is free. I just need to register. Okay, guys, have a beautiful day and a beautiful week, and good luck with your trading. If you do have questions to me, AlexFX00 is the way to get hold of me. Have a great day, and thank you so much for watching. Bye-bye.